Hello, everyone. My name is Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 6th, 2022, and we're so very close. We are very close, okay? And we're going to look at how we know we're very close to a big move up and out of this boring, tedious, but very productive consolidation range, okay? Remember, whenever you do something like this for an extended period of time, you're not doing it for nothing. You're essentially collecting buys and sells. You're collecting orders. You're creating a potential or a cause for a large effect, If you think it's going up, it's probably going up quite substantially. If you think it's going down quite substantially, because you do not consolidate like this for such a long period of time and not result in a large explosive move, okay? So we're very close. Whether you think the next move is up or down, we're very close to a move up and out or down and out, okay? And on this channel, as many people may already know, especially if you're subscribed, you'll know that I believe that the direction of the move is up, okay? One of the reasons for that is you have an exhaustion of this trend, okay? Here, this descending broadening wedge is an ending diagonal. For those of you who study Elliott wave theory, you know that you only get an ending diagonal at the end of a trend, okay? It can be the end of a third wave, but typically it's the end of a wave 5, okay? And if you count 5 waves in any trend, you know that trend is complete. And after that trend, you get something called AB basing or consolidation reversal, and that's what this is. And then you can effectively put in a trend reversal, okay? So your trend was down, then your trend changes from down to up with that trend reversal, okay? And this is what we're counting here in this AB base. So we've got our initial break of structure, right? A 3-wave move targeting wave 4 of the previous trend. Then you got a B wave, okay? And this I count as a 333 WXYXZ, okay? So that goes all the way down to here, okay? So that's my first degree of consolidation reversal. And then I have in blue our second degree that we're currently forming, okay? I'm counting it as best as I can because these things are tough to count as they're forming, okay? They're still useful in that they give you a little bit of an idea as to what may be happening, but it's hard to say with 100% certitude that this is exactly what's happening and how it's happening, especially when you get these complex corrections, okay? So again, my initial break of structure, my A wave, followed by a complex B wave, and that's what I've been trying to count. For me, this right here, this move yesterday was pretty big. And the reason for that is that we know that every single last corrective pattern ends in impulse. That to me looks impulsive, okay? You have an impulsive move up and an impulsive move down. That impulsive move down seemed to me as a completion of this 333, once again, a 333 complex correction, okay? WXYXZ, okay? And so here is simply should be a pivot for a move up if we're correct, okay? But again, this is a low probability read, low probability in the sense that there's so many complex corrections. You just need to make one little error, miss a wave or miscount one little thing, and a lot of it is thrown off, okay? So although you may want to do these counts of complex corrections, double threes, triple threes, and AB basing, it's just one thing that you use to understand what's going on, okay? If you're subscribed to the channel, especially lately, we've been very interested in what the DXY or the US dollar index is doing, okay? When can we break out of this 8-day consolidation reversal pattern, okay? When can we break out of it? I think the DXY has the answer, and it's a much easier read than this. Okay, this is why I'm saying we're very close. Guys, if you're getting value, please like, share, and subscribe. Hope you're having a great Tuesday. Please shout yourself out, shout yourselves out wherever you're listening or watching from. Okay, and definitely like the stream if you're getting value. So let me take a water break really quickly, check the chat, and then we'll get on to the DXY. All right, let's see. Okay. So moving on to the DXY. This is where we really get excited. If you can't read the DXY, if you have no idea what's going on there, then it's hard to say, with any kind of excitement, when or how this is going to conclude. Good luck trying to count it as some sort of triangle, which some people are doing. Yeah, because you could just continue to go and consolidate, right? And I don't know. I guess you can make a case for seeing some sort of, what would that be? A barrier triangle? Maybe? Something like that. But then again, still, it's very hard to say because you're trying to count what's going on here, and it seems to be able to go on ad infinitum, right? So again, it's useful to use the A/B basing theory, but again, I think it's a lot more clear in the DXY itself. Okay, and why the DXY? Why? Just a quick reiteration for those of you who don't know. Bitcoin right now is about 40% of the cryptocurrency's $1 trillion market cap. Okay, it's about 40% of that. So meaning Bitcoin is comprised of it's about, in total, a $400 billion market cap. Okay, $400 billion of market cap is relatively large. It's not huge for traditional stocks or anything like that, but it's relatively large for, the average retail investor or even institutional investor to make a buy or a sell and completely move the market. That's not how this works. The big moves in cryptocurrency, in Bitcoin especially, happen because of the DXY, the US dollar index, the underlying asset. You all understand just how important the dollar is in the world. The dollar is represents about 60% of the world's reserve currencies. Okay, 60% of the world's reserve currencies are in US dollar. Okay, and if that's true, then more or less when people are buying Bitcoin, they're doing so using the US dollar. Okay, so if you're buying Bitcoin, I've done this before for those of you coming back, I'm just going to do it really quickly. If you're buying Bitcoin using the US dollar, and this is the ratio, right? Bitcoin is to the US dollar inversely proportional to the US dollar. The higher in value that the US dollar goes, the lower Bitcoin has to go to maintain this ratio right here, okay? And the lower the US dollar goes, then the higher Bitcoin goes in valuation to maintain this ratio. So that is my thesis. My thesis is that any large changes that you see in Bitcoin's $400 billion market cap, and it's $400 billion now at the bottom of a market, okay? Just imagine what it is, when we're actually in a bull run. $400 billion for you to see and perceive any major changes. It's strictly, not strictly, but it's by and large, in large part due to the fluctuations that you see in the US dollar, the US dollar index, right? And you can see this perfectly when you look at a chart of Bitcoin versus US dollar. They're mirror images of one another. I'm going to show you this. Okay, this is right here. This is a chart I made of comparing Bitcoin and the US dollar. Bitcoin's on top, the US dollar index is on the bottom. And you can see that. So US dollar index, if you don't know, is the relative strength of the US dollar as traded against a basket of world currencies like the yen, the franc, sorry, not the franc, the yen, the euro, the I think the pound, right? The yuan, and you can see basically they're mirror images of one another. Okay, so this is why it's so important to look at the DXY to really understand how Bitcoin's going to move. And if we're saying we're close, then what has to happen? We have to get a big move down in the DXY, and that is likely what we're getting. Okay, really quickly going on to the large time frames. I showed this yesterday, but here you can clearly see we are at the end of a trend. Okay, we have 5 waves up, we have 3 waves, a 3-wave move that we're in. We're currently in a 3-wave move. We've been in correction in the dollar index since January of 2017. For those saying, how have we been in correction? We're at 20-year highs. Then, my friend, you may not understand how Elliott waves work, okay? Just because you make nominal highs or lows doesn't mean you're in correction, right? There's something called an expanded flat, whereby you make a higher high than the nominal high that you set at the end of your 5th wave. So the end of your 5th wave was here. You put in 3 waves down. That was your A wave, okay? Now you have this 3-wave move. That is your B wave. That's your counter wave to this A wave, okay? And that's making a higher high. That's hitting 110 here on the dollar index. This is not a bullish move. It is bullish in that it's making a higher high, and it's higher than, where you ended up at, around 103. However, it's in the context of a corrective move, okay? And we're finally getting rejection of that move. So let's go back into smaller time frames, and we can really see where you're getting rejection, where we're getting rejection on that higher move, okay? So you can see here, whoops, I don't need this either. Okay, you can see here you've been forming. So besides the momentum indicators, the monthly, the weekly, the monthly, and I believe the daily are showing strong bearish divergence. Okay, that aside, just looking at pure price action, you can see this ending diagonal, basically a rising wedge. We know rising wedges tend to break down. Okay, they can break up, but they tend to break down, especially in cases where you formed a high, you came up, you tried to form the same high, got rejected, and you came up, tried to form the same high 3 times and got rejected 1 more time. This is why we're so close, right? I used to call this the pitchfork pattern on the channel, okay? Earlier on the channel, I used to call it the pitchfork pattern. You go up, you try once, you try twice, you try 3 times. A lot of people know about the rule of 3 in technical analysis. There's something about 3s. So if you break this down in terms of A-B basing, what you're essentially getting, and yesterday, remember, we were right about here yesterday, during yesterday's stream, and I said we were likely to come up for that B wave, and that's exactly what we did. And look at the nature of this wave, this move, this wick. It's very, very strong rejection, right? When you have a big wick to the upside, you know that there's strong selling pressure. You know that there's strong resistance. You have a big wick to the downside, you know that there's strong buying pressure or strong support, okay? So this is clearly strong resistance because there's a big wick on the small time frame. This is a 15-minute time frame. There's a huge wick when you went into this region of 110, which represents our main resistance, okay? So we came down again in 3 waves, 1, 2, 3. That's your initial break of structure. And once again, your B wave is a composed wave. So 3 waves up, 3 waves down, and then an impulse to the upside. This all is a B wave. It's a composed B wave, okay? I know it's not easy to see, especially when you're getting started in Elliott wave. And trust me, when I first read about Elliott waves and looked at some examples, not examples, but looked at some schematics in a book, tried to make sense of like these wave patterns. Then I looked at actual charts. It's like I'd never studied them before because they don't look like this in the examples, right? They just show you in the examples. They show you like this. Okay, those are the three waves. But what they don't really some books tell you this, but it's hard to really conceptualize and internalize the fact that this wave usually looks like this. It's a three-wave move, okay? And this wave right here, sometimes it looks like this, but rarely does it look like that. Most of the time, that wave is a composed B wave. It's a flat in and of itself. It's a flat within a flat, except it's not in that. It would be like this. It would be just like that, okay? Actually, yeah, in that case, it would be like this. It would be opposite of the larger pattern, right? So this is what you're seeing here. I know it's confusing, or sometimes it could be like this, right? It could be a complex correction right here, and that's your B wave, right? You can have composed B waves. This is why most people can't read corrective price action, because it takes a lot of doing to really wrap your head around this and to gain rudimentary and working level of fluency in reading corrective price action, and for it not to look like chop, okay? But essentially what you're seeing here is an ABC correction, okay? This is your A wave, that's the end of your B wave, you're going to get a pivot, and then you're going to start coming down, okay? So that's exactly what you're getting here, and this is why we're so close, because we've hit the 1, 2, 3 points, okay? And why 3 points? Remember, AB bases, we always talk about them, but we've been talking about them in the past few months as bullish reversals, right? Now this is a bearish AB base, so schematically, what it's going to look like is something like this. Big A, so an initial break of structure, which you get right here, okay? And then right here, you're getting a composed B wave. So it's kind of like this. Okay, just simplified. Do you see that? That flat correction is simplified. If you can see it, it looks like that. Do you see? I know it's hard to wrap your head around, but just stay with me. So that's big A, big B. That's your first two, okay? That's your first two kind of, that's your first degree. So your first two AB bases. And then here you're going to have the same thing, but on a smaller level, to a smaller degree. So here it's likely that you do something like this. So you've already put in 3 waves here. You're likely to put 3 waves here and then come down, okay? So that's why we're so close. It's likely that we get something like this. So that you'd call that small a, small b, or I would call that. I call them big A, big B, small a, small b, 2 degrees of AB basing. And that results in what you see here. Your 1, I guess 2, 3 points, okay? And this third point, sometimes you get a 4th point, but a lot of times you get really 3 clear points right here. Again, sometimes you get a 4th point. Sometimes this small b, sometimes this small b right here comes up to here. It doesn't come to the extent. Sometimes it even comes past here. You know, they're corrective patterns. They're mercurial. They look like a lot of different things. They're very challenging. But all I'm saying is we're at resistance. We continue to test. Hey, is this the extent? Is this the extent? Is this the extent? And price is saying yes, we cannot or do not want to exceed 110 or the region of 110. Okay? So that's why we've got now, if you look, a rounded top. Okay? Rounded bottoms denote bottoms. Rounded tops denote tops. That's what we call rounded top, rounded bottom. Okay? And it's not just, of course, the 15-minute time frame, but again, if you zoom out, you can see exactly that, right? You can see another larger degree of AB basing. This is your A wave, this is your B wave. What you're doing here is small degrees of AB basing. You're pivoting and you're creating, again, 1, 2, expect a third. If not, if you didn't already get it, let's see. So you got a big, this may be 1, 2, 3, or it may be 1, 2, you may get another test. But this is your region of resistance, okay? So that's why we're very close, okay? So it's a combination. My read on the market is a combination of looking at the DXY, okay, on the large and small time frames, as well as looking at Bitcoin, okay? And seeing how is Bitcoin reacting to that, right? If our read is correct, we should have a move very, very soon. All right? That's the long and short of it, right? That's why we're so close. This is why I'm reading it as such. Hey Milad, what's up? ENS is doing well, Milad says. Nice hash login says 3 white soldiers on ETH about to send it on the daily chart. Okay, cool. Let's check out ENS as well as ETH. Okay, I know I bought a little more ETH this morning. What's the word I'm looking for? Extended? No, that's not the word. I enlarged my position. Yeah, I just bought more and added to my position. Because, you know, it's just hard. What this extended consolidation period has done is basically encourage me to buy more and more and more and more and more because I've had the opportunity. Like, this is opportunity, and I'm not the only one. A lot of people have taken these long periods of consolidation and said, well, might as well. This is why that resulting move is going to be massive. And I guess this is where we're going to go next. So first, let's have a look at ETH. Let's have a look at ENS. So I'm not exactly sure what 3 white soldiers are. Nice hash login. If you want to elaborate, wouldn't mind. But yeah, ETH looks very good. For me, I'm just seeing this as an intrawave flat correction. That's all it is, right? Looks like whatever you had here, I mean, just on the small time frames, right? This is hourly time frame. I mean, this looks like a 1, 2, 3, 4, and then you're putting in a 5th wave up here. Okay, let me just test that really quickly. So if this was, yep, that's what it looks like. So wave 1, the 0618 retrace, sharp correction, right? That's what you expect. Takes about the same amount of time as the first wave took to form. Wave 3 between the 2 and the 1618 of wave 1's extension, and then relatively simple correction for wave 2, relatively complex correction for wave 4. That's so yeah, that's what I'm seeing for ETH. It looks really good here. Looks like a simple ABC, or if you want WXY, but it looks like a simple ABC. Looks like it's about to go, you know? And that's the beauty of these altcoins, that they follow Bitcoin's rhythm, you know, and this is why, you know, we track the price of Bitcoin as a proxy for the cryptocurrency markets at large, right? But unlike Bitcoin, they don't have $400 billion market caps, so they can move a little more freely based off of people buying and selling, right? Companies, individuals, wealthy individuals buying and selling the asset. So they're going to mirror Bitcoin, but they're not going to completely decouple from it, at least not yet, okay? And what you can see in ETH is the larger pattern is you have an inverse head and shoulders, okay? and that's a quite bullish pattern. You take the neckline of that, typically the target is the height of the head as superimposed from the neckline. So you should expect to get something like you should expect to get an extended wave 5, okay, in this ETH in this ETH impulse, and it should come up to this high. Do you see that right here? You should hit the $2,000 mark, right, for ETH. That should be your next hit, and then I anticipate some sort of correction, and then a continuation, right, an impulsive continuation. But just zooming out real quick. Yep, and yeah, that looks very likely. You come up here, you consolidate a little bit, and then that's the massive move. After you come up and consolidate, here, okay, this is what we're gonna do. This is what I think ETH is going to look like with a high degree of probability in the near future. Okay, let's just put this out right now. Okay, so let's go back on the hourly time frame and put these wave counts in. Actually, no, let's stay on the 4 hourly time frame. Okay, let's say that you get your move to the $2,000 level. Your 2 wave is gonna be a deep correction. Usually is, okay? It doesn't have to be, but it usually is a deep, fast 3 wave zigzag, okay? And then wave 3 is gonna be somewhere up here. Okay, we'll deal with wave 3 and 4 and 5 in a second. Okay, let's turn on the lines. But yeah, these moves are going to be massive, a lot bigger than people think. You know, I know a lot of people can't conceive, given the market and the way it's lulled us to sleep, people can't conceive of double-digit moves intraday, triple-digit moves, triple-digit percentage moves intraday. But that's definitely a thing. That can happen quite easily. That third wave, to me, has to be the height of this head and shoulders, you see? So my third wave for ETH would be now up here. Okay, close to 48. So people that, you know, want to buy $800 ETH, they're gonna be waiting for Godot, right? That's a book by a famous author. It means waiting for forever, because it's not happening. It's very unlikely, all right? Dealing probabilities, not certainties, but just looking at the charts, it's unlikely. It's very unlikely. So again, you're getting wave 3 up to 48K, and again, that is coincident with this high right here. So you're basically meeting this high, you consolidate, and then you probably pop up for a conservative wave 5. Your wave 4 probably takes a little time. Conservative wave 5 right here, making your higher high. Yeah, so I mean, this is what I'm seeing. It's just, it's likely to be very, very fast. And what I can say in addition to this, remember, because we're not just doing price but time analysis as well. Okay, it's a lot easier to do time analysis when you're dealing with impulsive price action. Okay, when you're in impulse, waves of the same degree are comparable in time and in price. All right, I know people say equal in time and price, but obviously there's not equality, it's comparability. Okay, so let's say we did get wave 1 up by September 10th, okay, which is just in a few days. That would mean that wave 2 should take you about 5 days, because it's taken thus far about 5 days to get up to that $2,000 level in this impulse. So you should have wave 2 end by around September 15th. Do you see how that works? and this is how you structure your waves. So, I mean, let's just leave this on. We'll see what it does. But this is a high probability wave count for Ethereum. Okay, obviously, any of these waves can be extended. Wave 3 could be extended, wave 5 could be extended, but it's likely that you respect these strong resistances here. You respect this resistance here at 2000, right? You respect these resistances, and then you do consolidate a little bit at them. Okay, so that's Ethereum. Now, ENS, let's add. Did I add the right one? I don't know. Okay, ENS. Okay, it looks like it's on its way. So we have our wave count from yesterday, and we can see that it's already going into its third wave. Okay, it's going into its third wave. So yeah, as Milad said, it's doing well. It's doing what we thought it would do, right? Going up into this third wave, and it's likely that the third wave ends somewhere here, you know, and we look at this resistance here, so that's why I have the wave up here. So we'll see. But yeah, it's likely in the next few days that you come up here and you put in something like 145%, right? In the next few days for ENS, right? And then in Ethereum, it's likely that you put in about, let's see, about 23%. Okay. So yeah, this is what I'm seeing in the market. Again, not everything's going to be at the same exact point in its advanced, same exact development, right? Just like people, just like things in life, these assets, they may be doing something similar, but they're at different points in their development of their advance. So, you know, just because Ethereum's going up 23% and then retraces a bit doesn't mean it's not going to make big advances. It's just not in its third wave, right? Because if you look, actually, you could say that this is the first wave of Ethereum, and you came down, and this whole thing is the third wave. So if you look and say July 13th was the beginning, and again, when we're dealing in Elliott waves, you're dealing in degrees. So don't be confused. Just because I put this as wave 1, wave 2, wave 3, wave 4, wave 5, this is a smaller degree. This is the primary degree. So you could say that this is wave 1 right here of primary degree, just say, right? As starting off as a primary degree wave 2, primary wave 3. So this count would be your intermediate count. Do you understand? It's just a smaller level. Think Russian dolls. Okay? And so look, I put this, look where I have that wave 3. Okay? And do you see what I just did? I put that as my primary wave 1, primary wave 2. So I just said, you know, for fun, let's pull the Fibonacci extension of this purported wave 1 and this purported wave 2 to the orthodox low. And lo and behold, the Fibonacci extension of 1618 goes exactly to where we put wave 3. And mind you, I did not project wave 3 using that. I just projected wave 3 using the information I had in this wave right here and with these highs. Do you see what I mean? It's very likely, given this is what we call confluence in technical analysis, it's very likely, given the confluence of events, confluence of factors, that 47, 30, 36, whatever, 47, 36, you know, give or take some dollars, that is your wave 3 terminus. It's very likely that that's your next main target in this primary count. Okay, this is, you know, the next you know, important target in the intermediate count. Hope that makes sense. Hope it's not overly confusing. But yeah, Elliott waves, people say it doesn't work, whatever, you know, it's not something that you just pick up super easy. I mean, everybody's different, but you know, it does take some doing, but once you get the hang of it, it's very useful. It's not a crystal ball, but sometimes it is. Sometimes it is like a crystal ball. All right, we like how the price action is forming this super bearish kind of price action where you have a lot of wicking to the upside. Remember, whenever you see wicks to the upside, think selling pressure, bearish, right? So you're trying to go up, lots of wicking. This to me looks like this. Okay, remember I said this is a three-wave move. Expect another move to the upside. What I'm seeing right now with this price action on the 15-minute time frame, I'm seeing a zigzag. So what's a zigzag? 1, 2, 3. 1, 2, 3, 4, 5. A zigzag is a three-wave move where the B wave doesn't necessarily come up as high as what you would expect in a flat correction, right? Flat correction would be a three-wave move, right? 1, 2, 3, 1, 2, 3. A lot of times that middle flat correction or that B wave makes a higher high than your A wave. You pivot and then you come down with your 5 waves. Okay, so that would result in your what would you call that? An expanded flat, right? Sometimes the expanded flats like that, whatever. Okay, here it's different. I think what you're getting here is a simple zigzag where you don't come up as high and you only retrace to between the 0.5 and the 618 of your A wave. So if you take your Fibonacci retracement tool from the top of this A wave to the bottom, you just hit your 0.5 right here. So you satisfied the retracement, the minimum retracement of your B wave. So again, it's a three-wave move. You come up to this region and then you nuke. So that tells me that we're really, really, really close, okay? Just judging by that. And I don't think this is a flat correction because a flat correction doesn't have this kind of bearish sentiment. A flat correction looks more like this. You see this? So this came up, A wave, B wave. That's what you get. That's the AB basing you get at the bottom of a flat corrective B wave. And then you have a nice impulse for your B wave, okay? You're not getting that here. You're getting a concerted three-wave move that's more of a zigzag, okay? And so I think that zigzag starts the impulse that we need to rally in Bitcoin and in altcoins in the cryptocurrency market, okay? So now let's talk about Bitcoin. Speaking of, really... Okay, and so I really, really like what I'm seeing on this chart right here. Hold up, let me go to questions real quick and then I'm going to get back into the charts. Okay, so Nice Hash Login says the 3 white soldiers are 3 green daily candles in a row on the daily. 3 white soldiers candlestick pattern. Okay, so let's see about that. Learn something new every day. I've heard of it before, but I never really paid attention to it. Let's just look at that really quickly. So let's go on the daily time frame. Daily time frame. Okay, yeah, he's absolutely correct. This daily time frame, 3, 1, 2, 3 daily candles. Okay, 3 daily candles. And what else did he say? Three white soldiers candles. Yep, yeah, that's it. 3 daily candles in a row. Yeah, that's very, very bullish. That's very bullish. So yeah, all right, yeah, 3 white soldiers indeed. Milad says, what do you think of Rose Coin? And then MB says, can you pull up the LTC BTC chart? Absolutely. All right, so let's go into Rose Coin first, and then we'll pull up the LTC BTC chart. But then before that, I just want to have a quick look at Bitcoin because I see something interesting that we haven't seen before. Well, at least in the past few days. So Rose coin. So quick disclaimer: I don't know anything about Rose coin fundamentally. Okay, and just generally speaking, if I'm going to invest in anything, or even say that somebody should even consider investing in something, it has to be fundamentally sound. Okay, and like something fundamentally sound basically means it's not likely to rug, right? You use a variety of signs, of indications, of criteria to ascertain whether or not a project or an asset is fundamentally sound, right? You look at the team, you look at, you have a read through the white paper, you see if it's even like a sensible idea that could be useful. You look at the people invested in it, right? Who's invested? Like, is it a private group? There's a lot of venture capitalists. You see how much they put in it, right? Usually, if I see Binance invested, if I see Coinbase invested, or Coinbase Ventures, like Three Arrows used to be. It's sad. Three Arrows used to be one of those, like, oh, Three Arrows is invested? Okay, this is a really good project. But obviously we know what happened to Three Arrows. But, you do your best. You look at who else invested. You look at the seriousness of the project. You look at who's buying it, if the team is doxed, right? Or are they anonymous? You look at what they've done before even looking at the chart. That's what I do. Because if you just look at charts, you don't have the whole story. Because if you just look at charts, maybe it's a bad project, maybe it's a scam. Even with a good chart, if it's fundamentally unsound, then it's worthless, right? So I don't talk a lot about fundamentals on this channel. I basically focus on the chart. But just full disclaimer, before I put money in, before they get on this list, right, my active trades, whether spot or leverage, I will do a basic level of fundamental analysis. There's a reason I don't invest in what's it called? What is that? Oh, why can't I think of it right now? It's a layer one. It starts with an S, I believe. It's by Sam Bankman-Fried and them. What's it called? It starts with an S. Solana. Okay. Yeah, I don't invest in Solana because it keeps breaking down. Like, I don't care what the chart looks like. It's a layer one that keeps breaking down. We're talking about cryptocurrencies. They're supposed to be reliable. They're supposed to not be centralized. They're supposed to be all these things. And literally, Solana does. It hasn't rugged, and it has Sam Bankman-Fried has a lot of money, and I trust him and his team. But that project really, really rubs me the wrong way, in that they're just, I don't like how it's run, right? So yeah, it's not on the list, or else I would have definitely put it on the list. It's a rising star, layer one, tons of funding, but fundamentally I don't like it. So yeah, that's just a little aside. Okay, looking at Rose on the daily, this is May 12th, your orthodox low. You make your initial break of structure. This is clear your counter wave, so that's your big A, big B. Here you go. This is your small A. I think this is your 1, 2, 3 flat correction, small b. Okay, I think you started your impulse in Rose on July 25th. I think that is 5 waves up. Okay, I think you have 1, 2, 3, 4, 5. Okay, up, and we should see a volume spike here on July 26th. Boom. Do you see that? That's how you use indicators corroboratively. Yeah, Like, I don't even have to use my indicator, but I read my price action first and foremost. Then I go and check to see what my indicators say, if it's corroborating my read. Okay, so that's my 5 waves up. And if that's true also, my retracement will respect the 0618. Let's see. Okay, and just barely. But yeah, I would say that this respects the 0618 because this is my orthodox low right here. And this is my A wave, this is my B wave, this is my consolidation, my consolidation reversal. So Rose is put in wave 1, wave 2, this is going to be wave 3. Another way I can kind of try and verify that it's indeed wave 1, wave 2 into wave 3. So I can take the time it took for wave 1, okay, about 14 days, and then the time it took for wave 2 to the orthodox low, 13 days. Do you guys see how that works? I've never looked at this coin ever, but I'm just using principles here, right? Waves of the same degree are comparable or equal if you want. Some people say equal, but I like to say comparable or proportional in time and in price. You've seen 13 bars or 13 days for the 5 waves up, 13 days for the 5 waves down. That's comparability in time. And then you saw that basically the wave 2 or the retrace, the 3-wave retrace down was down to the golden mean or the 0618 where you expect wave 2 to retrace to. Remember, wave 2 is typically a fast 3-wave move to the 0618 region because most people do not trust the new change of trend. Okay, most retail investors, most market participants think that this is going to continue. So when you go up for the first new impulse of the new trend, they sell into strength. That's what you usually get in wave 2. That's your reversal consolidation right here for that wave 2, and that you've been in for 15 days, and then expect a wave 3. And the target for wave 3 on the balance of probability, remember it can always be extended, but on the balance of probability, expect wave 3 to come to between 1618 and 2 Fibonacci retracement, and that would take you back into this region right here. Okay, don't be surprised if it's even extended and it comes here, but this is what I see on Rose. I do see a move. I mean, any minute it seems, right? Looks like it's consolidated quite a bit. I see like a massive 3 to 500% gain in the next wave for Rose. Okay, whatever it is, I have no idea what it is. I don't know what it does or what it purports to do, but that's what the charts look. The chart looks really, really good. Okay. Let's see. Okay, then MB, we're going to pull up LTC to BTC, but first we're going to look at Bitcoin. Milad says, I was thinking maybe to sell ENS for Rose, but I have to search for more info about Rose because Rose goes up fast. Yeah, I mean, at the end of the day, one thing I learned is don't trade in and out. When I first started, and I remember 2000, I don't remember what it was. I think it was 2021, that B wave that was going up impulsively. I was getting so excited. Things were going up double digits every day. And what I was doing is, I was like, I want to make as much money as possible. So what I'm going to do is I'm going to buy the coins that go up the fastest. And then I'm going to sell them and then go into the other coins that go the fastest. But basically what I did is I overtraded and I ended up missing the meat of moves. So what you want to do is just buy and get out of the way. Don't overtrade it. Like, buy around now and make the decision and then just leave it. Don't get FOMO if you see something else running. Just like we gave the example, you see Ethereum may only go up 23% before it corrects, but that doesn't mean it's not going to go up 200, 300, 400% as well. It's just at a different stage in its wave advance. Do you see what I mean? And if you were to over trade it, sell it too early, you're going to miss that move because you can't always you can do like you know, time analysis, right? But you can't tell exactly when it's going to move. I mean, you know, with a high degree of probability. So you just have to wait for it to happen, right? So that's my best advice. Like, just decide what you want to do now, buy and hold. If time's on your side, you will get your gains. Trust me, you're going to get your gains. Because let's say Rose runs really fast, it's going to then correct first. It's going to be the first to correct because nothing goes up forever. If it goes up really fast, then it's just probably going to correct faster than the other coins that go up a little slower, right? So that's what I would say. You know, diversify your portfolio, but once you're in those trades, just let them go. And a lot of people that are on crypto Twitter, a lot of people that are in the crypto community who don't know anything about trading made a lot of money just buying and holding and not over trading and not even selling the top, right? And, you know, I guess because they have a lot of money, people think they can trade and they maybe pose as people that can trade, but they can't even read a chart most of the time, okay? But it has nothing to do with skill. It's just patience and understanding that, you know, eventually it's going to play out, especially if it's in a bull market, because everything plays out in a bull market. So yeah, let's look at that that thing I wanted to look at on Bitcoin real quick, and then we'll have a look at big move. This is what I wanted to look at. Big move, big move, big move. Look at that. These things are exciting. Not because we want the price to go down, but because when the price does something like this, you know it's going to be volatile. Yeah? Any move up or down basically leads into volatility. Usually if you go down one, you go up for the next. You know what I mean? You're basically completing. So this is what I wanted to look at, actually. Let's go on the hourly time frame. Remember, every corrective wave, every corrective pattern ends in impulse. So, you know, don't be fooled. If we were to do something opposite, go up really fast but a little bit and then bounce down, that would be a bad sign, okay? But the fact that we were in some sort of correction and we correct down, that may be it. That may be it, okay? So I would look at this. Let's just recount this real quick. And then we'll have a look at the DXY real quick, see what the DXY is doing. DXY must be putting in one last move of its own. So I would say, let's see. I don't need this. I'm trying to figure. Let's see. Probably W's over here. X. W. X. Y. X. This is probably Z. Right here. And we should get a massive volume candle here. Yup. That's the end of the move. This is the end of that move. This is it. This is it. This should be it. Okay? And what we should be seeing in the DXY is one last move up and a big rejection. Okay? So we should be seeing one last move up. Let's go back on the 15-minute time frame. Okay, remember we said it's likely going to be some sort of zigzag. Okay, that's what we got here. Let's see. But you guys see how this area has been respected? Even though we got that big dump, it wasn't because, you know, the DXY went crazy. It's just, it's ending out that move. We're really, really, really close. Like, really, really close. Look at that. So let's just prove it to ourselves. Take the Fibonacci retracement tool, and we can see how we're still in this zone. So any zigzag should have that B wave go no further than the 0618. So this should be the limit to this B wave, this 3-wave move, before rejection down. Okay, so that's what we're seeing. So the DXY is looking really good and really close to that big rejection down. Okay, and Bitcoin likewise is looking really good in that capitulative move to the downside, completing our impulse. Okay, no, it looks really, really scary, but again, remember, every big move, every corrective move ends in a move to the downside, or every corrective move ends in impulse. So let's see how this plays out. We should get a big bounce out of this, a massive bounce out of this to the upside. Okay, everything dropping. Wow, big moves, massive moves here. This is huge. I think this is the move we've all been waiting for. Look at that. Basically taking you to the bottom of the range, right? You've been in the range, you've been in the range, you've been in the range. You're basically testing the bottom of the range one more time. This is where all the liquidity is. Okay? For Bitcoin, you've gone beyond the bottom of the range, right? You've been in the range, you've been in the range, you've been in the range. You sort of, you're grabbing liquidity at the bottom of the range, beyond the bottom of the range. Okay, that's extremely bullish. Don't be confused. This is really bullish, and this is the trick to trying to trade these up and down. You know, when you're in these ranges, if you read the range as a consolidation reversal range to the upside or whatever to the downside, you want to average in. It's not about, like 90% of traders on crypto Twitter do, trying to long and short these moves. That's just, I mean, it's crazy. That's absolutely crazy. It's such a low probability strategy, right? There's just too much variance and there's too much uncertainty, and yeah, there's just too much variance, too much uncertainty to try to trade that up and down. It's nuts. Absolutely nuts. Litecoin. Retesting this right here. This is huge. Right? This is huge. This is huge. This is huge. It's very bullish. Very bullish. Very bullish. This is volatility. Big volatility. But big volatility. Before a big move, a strong move, you typically see a move in the opposite direction, right? And the reason you usually see a move in the opposite direction is because every corrective sequence ends in impulse. So the last move before a big move in one direction is going to be preceded by a move in the opposite direction. And then you see, that's what you typically see. That's why you see it. And I know a lot of people have nefarious agendas or see the world as nefarious, and they're basically thinking it's the man or the whales trying to stop you out of your positions and basically clean out the people who got in late or whatever, or with small margins, and you can look at it that way, but it's not really like anybody trying to hurt you or trying to make you lose your money. It's just what price does. Like I said, every corrective pattern ends in impulse. Okay, so that's how you know. And you usually have that capitulative volume candle that shows you the end of an impulse. And it is also a liquidity grab. Okay, it's nothing personal. It's just price goes where money is. So if there's some money down here, right? Like, why did Bitcoin go way below its range? Probably because there was a pool of money down here, right? And that pool of money may have been because people looking for lower prices, so they had limit orders set here, or stop losses or liquidation levels, right, set right here. Grab the money and go. It's nothing personal, right? That's why risk management over everything. You're in a range like this, you don't want to trade the middle of the range. You want to trade the bottoms if you're longing, right? You want to long the bottoms and you want to short the tops, but you don't want to trade the middle of the range. And if anything, you want to accumulate during this range, right? So if you think the next move is up, whatever, accumulate during this range and make sure your stops are well below at least 1 or 2 standard deviations the bottom of the range. You don't want to set your stops anywhere in the middle of the range because something like this is likely to happen, right? Let's just go back. So yeah, we're going to look at MB's Litecoin to Bitcoin chart in a second. But yeah, this is a huge move. This is why we're so close. You don't get this if you're not really close, guys. You don't get this if you're not really close. It's darkest before the dawn, right? Milad says, I was thinking maybe to sell ENS for Rose. Oh, I already read that. BTC is crashing, dipping, sold, buy cheaper. How low will BTC go, do you think? Bottom of the range, Milad. It's nothing. It's nothing personal. It's nothing scary. It's nothing. We don't sort of. It's nothing that we don't anticipate. The end of every corrective move is impulsive, and what you should see is a big move to the upside in the opposite direction. We've seen it many times. If you chart, you see it many times, and you're still holding. Don't freak out. You're still holding crucial market structure here. Okay, you're still holding crucial market structure in Cardano. You're still holding crucial market structure in Shiba Inu. Okay, you're holding this range that you were in. You haven't broken it. You just went to the top of the range and back to the bottom. There's nothing really special about this. You're still in your range for Kadena. Okay, you're still in your range. Litecoin. You've come up. Let's see. You've come up and you've come down to around the golden mean of this move. Okay, so you're around the 0.618 of this move to the upside. Nothing to write home about. You're essentially testing this resistance that you broke. Okay, in Litecoin. Okay, you can come down even further, because if this comes down further, then this is just another A wave, B wave testing the 786. But that's much ado about nothing. You're not breaking this low. You're not creating a lower low. You're not breaking the range lows. Okay, so that's Litecoin. XRP, you're still in that range. You're just basically revisiting the bottom of a range, grabbing liquidity before leaving the top. Okay, we just can go down the line, guys. This is how it works. Here it looks in reserve rights like you put in a B wave, okay, to the 0.5 to 618. That looks like a zigzag. Your next move is up, okay. VRA, you really did the dip. Came down all the way to about 41.6. Let's see. Dodo, 12.30. Let's see. Yep. This is the last big move before a bounce up, as I see it. Alright, synthetics, same thing, you're holding that range. Zilt, you're holding that range. Harmony, you're holding that range. And ENS, you're more than holding the range because you're in impulse, okay? Alright, now let's look at a Litecoin to Bitcoin for MB. I haven't done this in a while, and one of the reasons, let's put this in miscellaneous. Let's see. LTC to BTC. Okay, I don't look at this anymore, and I used to have a whole category of just hybrid charts. And the reason I don't look at this, well, first let me start with the reason I used to look at these charts, okay? So Litecoin to Bitcoin, Bitcoin to Litecoin, or whatever, like all kinds of charts like that. I used to, when I first started in cryptocurrency, I think Litecoin was the first crypto that I bought. And I needed to, well, I couldn't chart, but I needed to use my Bitcoin to sell my Bitcoin to buy Litecoin, okay? And you needed to do that for a lot of altcoins back in the day, okay, back in 2017. But, you know, then with the advent of stable coins, you no longer needed to do that. Then I started looking at these kinds of coins or these kinds of charts after I kind of started understanding how to chart a little bit and looking at charts, because I wanted to know what would make most sense to hold my money in to make as much money as possible. I tried to game the cycles, okay? Like, you know, when was alt season? Should I keep my money in Bitcoin or should I keep my money in altcoins? And I used to drive myself, I got headaches trying to figure everything out, yeah? Try to be as smart as possible to make as much as possible, you know, as to what to hold and all that stuff. So I would go in these kinds of charts, but at the end of the day, it's so much more difficult than simply just reading a chart against the same denominated currency. So it's so much easier for me today to read everything against USDT or USD and really understand what's going on. Here, if you're just looking at Litecoin, Bitcoin, it's very simple. It's very clear. It's extremely clear. Ever since 2018, you put this bull flag in. That's it. That's all it is. It's a bull flag. I knew this back then. I put this in probably years ago because I haven't looked at this chart in years. Okay? And that line I put in years ago. And this is essentially what I understood at that time, even with the little knowledge that I had, that you were creating a bull flag. Here's your impulse. Here's the bull flag consolidation. And this consolidation is a massive consolidation, right? It's a consolidation lasting almost 1750 days, almost 1750 days. Your next move is likely going to be of similar size as the flagpole superimposed from the site of breakout. That's very simple, right? But again, I think it breaks my brain to try and think in terms of sats and you know, how many Litecoin am I gonna make as opposed to keeping my money in Bitcoin. Like, I just think in terms of dollars. It's so much more simple. But yeah, this obviously Litecoin's going to cream Bitcoin. It's going to cream Bitcoin. It's been losing against Bitcoin for 1750 days, and it's now going to cream Bitcoin and make up for it and go up to at least half a Bitcoin, it looks like, you know? So about one Litecoin is going to be about half a Bitcoin by the end of this move, judging by the pattern. That's interesting, but you kind of already knew that, right? You know that most altcoins, if not every altcoin, is going to cream Bitcoin. Bitcoin's not going to outplay altcoins on the way up. It seldom ever happens. Bitcoin outdoes altcoins on the way down, right? In bear markets, or in corrective patterns, let's say. So yeah, that's pretty much it for Litecoin Bitcoin chart. I hope that was helpful. MB. Let's see. Okay, let's go back to the chart. See how Bitcoin and all the other altcoins are faring. First, let's see how the DXY is doing. Go on the 15-minute time frame. Okay, so we did get our rejection up here around the 0.5 to 618 area. So this is highly likely to be what we thought, a zigzag. So 3 waves up, 3 waves down, 3 waves up, and then 5 waves down. Okay, so we're very, very close because it looks like we've gotten our rejection. We've gotten all that wicking, and then that coupled with what we're seeing in Bitcoin, right? This final move to the downside and a big bounce here in a lot of altcoins. This is the start. This is it. You know, it's either this or nothing, right? If this isn't it, then everything else, everything we've said can be thrown out the window. This should be it right here. This should be it. You should see a big bounce, not just in Bitcoin, but in all these other altcoins from this area of, if you want to talk supply and demand, of massive supply. Yeah, these are supply pools down. Whoops. These are supply pools down here. And that's where price went to grab some extra liquidity for a vicious move up. Yeah, so that's what we see. That's what's likely to happen. And you're seeing some big, strong reactions, right? Strong reactions. So, huge move in VRA. So already, VRA went down in just this 15-minute candle. It went down 10%. Okay, yeah, 10%. It's already recovered 5%. Do you see massive volatility? You don't get massive gains without massive volatility. This is why trying to trade these things up and down on a small time frame is suicide, especially with a lot of these altcoins. After a large, consolidative move like this, you just want to get the hell out of the way. You want to accumulate, and make sure that your stops are way outside of the range. And I usually say it's best to take the phi ratio of whatever A wave you can read and go well beyond the so take the A wave and go well beyond the phi ratio of that A wave. Okay, that should be where your stops are for that last move. So yeah, Bitcoin not bouncing as quickly as others, but I do expect it to bounce ultimately. Let's go to the 15-minute time frame. Yeah, it bottomed out on the 15-minute time frame, on the hourly time frame, 4-hourly time frame not so much, daily time frame dipped. Yep, weekly time frame almost cross bullish. We shall see, but this is what I'm seeing, right? And I do expect other altcoins, or not other altcoins, but other assets to react much faster than Bitcoin, because obviously Bitcoin's not as nimble. But, the DXY is complying, right? We want to always pay attention to the DXY because this is what really moves this market, and the DXY looks like it's at some sort of resistance. So I do expect, I think it's likely, it's not 100%, but it's likely that we do get this move down from the DXY, which would then take Bitcoin to where it needs to go. And I think in the meantime, other assets will lead the charge. You're seeing this rounded bottom here in Litecoin. You're forming this, small time frame consolidation reversal pattern for your big move. I think we're going to get it today. This big move is going to happen today. It's happening right now. Yeah. Volatility is good, especially if you want big moves to the upside or downside, whatever you're going. You want volatility, and you typically get volatility at the end of a correction, and that signifies the end of a correction. So here we go. Hold on to your pants, to your seats, or whatever. Guys, how are you guys playing this? Let me know how you guys are doing. Big bounce today or not? What do you guys think? Oh, Milad. Hold on. It's okay. Obviously, it's very important to do what you're comfortable doing, Milad said he sold. You got to be comfortable with your decisions, and that's good. You listen to yourself. Even if you watch, other YouTubers, you take other people's opinion into consideration. At the end of the day, you have to make your own decisions, and so good on you. Good on you. But yeah, I would have sold as well. But I literally spent all day doing this stuff, and I spent years studying this stuff, and it is. Don't get me wrong. When I see price go down very quickly, and I'm long, I get a little nervous. I'd be lying if I said I didn't. I get a little nervous, but that's my emotion. More important than my emotion is my analysis, okay? And again, what moves the price of Bitcoin? I know, based off my analysis, based on all my work, it's this thing, this US dollar index, this DXY, okay? If this DXY were putting in double, triple bottoms or something like that, and then, just on a large time frame looking bullish, on a small time frame looking bullish, then I would have probably wanted to sell as well. But, this looks bearish to me, and, just given the context of my analysis, I'm not afraid of further downside for crypto, for equities. Oh, we can also look at the SPX, actually, because today is a trading day. Let's have a quick look, and you can see there's really nothing that happened on the SPX. It's basing just like most other altcoins, you see. It's in this range, doing its, small time frame AB basing. Do expect it to bounce as well, right? You have here so many analysts on Twitter who dabble in Elliott wave will count this as 5 waves down. No, this is a corrective wave. This is an ABC. True wave move down, okay, that you expect in a wave 2 correction, right? 5 waves up, 3 waves down. Some AB basing, that's what we're doing here. Okay, you're in this range, you're gonna go up most likely. Okay, so that's what's going on in the SPX. But again, I think what's beautiful about understanding the strength or the importance of the SPX is, of the DXY is, if you really understand what moves crypto, you're not worried about the DXY or the Nasdaq, or sorry, the SPX and the Nasdaq, because that's not what moves crypto. What moves crypto is the underlying asset, the US dollar. Actually, that's the same thing, more or less, that moves the big traditional markets, um, but not as much as crypto. Crypto really moves on the DXY. So for me, that's what I'm looking at. Even if this breaks up and does form a flat correction, right? This is a corrective move. This is a corrective move. It's not an impulsive move, okay? So, having seen what I saw in Bitcoin, right? Having seen what I saw in other altcoins, for me, this is the last move of a corrective sequence up and out of this this 10-day range, I think. No, 8-day range, something like that. Yeah. So yes, that's what I'm seeing. That's why I'm seeing it. If there's nothing else, if you guys have nothing else to look at, uh, I'm gonna call it a stream. So let's see. So Milad says, I am bullish, but this is a small dip, so I've bought again cheaper. Good on you, man. Good on you. So let me get rid of all my scribblings. Okay. So yeah, let's just watch this. Actually, I'm going to take a second. You guys watch this. I'm going to take a second and run to the restroom. So please talk amongst yourselves. I'll be back in just a few minutes. All right, I'm back. What I miss? What I miss? All right, let's see. Okay, this should be a big bounce, big bounce. Okay, we're expecting a huge bounce. Let's see, has anything done big bouncing yet? No. We're seeing, I'll say this is small time frames. We're seeing important consolidation reversal patterns, right? It's formed on a small time frame where you have your initial break of structure, you're forming a rounded bottom. This is what you get at the bottom of a move, you know? So that's what you do want to see. That's what you do want to see. Look, this probably is the biggest bouncer. VRA. It's one of the biggest dumps, but also one of the biggest bounces. Okay, ETH back under 1600, but bouncing. Let me clean this up. Okay. Guys, I hope you're having a great Tuesday. And I hope you're excited for the big move in the market. I'm very excited. Very, very excited. Been waiting for this for a very long time. Alright. Let's put our momentum indicator on. Let's go back to our DXY. Alright, let's see. Are we still playing out that zigzag? Sure. We're still in that golden pocket, you see? Between the 0.5 and the 618. That's where you can expect the three-wave move in a zigzag to play out. So far so good. We do expect some rejection, some strong rejection for our impulsive wave down. Obviously, after a pivot, this may be the pivot. So both charts, both the SPX, or sorry, why do I keep saying the SPX? The DXY and Bitcoin's chart, as well as, you know, the rest of the cryptocurrencies, they're showing the big move right around the corner. We're very, very, very close. Yeah. Let's look and see if there's anything that hasn't started running yet. Or already. Okay, that's just a big bounce. Let's look at our crypto bubbles. Okay, top 100. Let's see, top 200. I think Luna Classic was already up big, that's why. VGX. Let's look at VGX. Did it already start running, or maybe it was already up? Alright, let's see. ULT really pops up. ULT, whatever that is, I don't know what it is. Let's look at VGX and ULT, yeah? So, VGX. No, it just didn't drop as much, so, because it's an impulse already. So VGX is not what we're looking for. ULT. ULT. Nope, that's not what I wanted. ULT. Well, it doesn't seem like they have a ticker. Or, I can't see anything from them. Okay. Let's go, let's go. Looks like some consolidation. Patterns. Are we going to get a reversal? We should. DXY still playing nice. DXY still doing what we thought it would do. It's rejecting from this golden pocket right here, right? Remember, we said this was likely a zigzag. So 3 waves down, 3 waves up between the 0.5 and the 618 of that initial break of structure, and then 5 waves down. Once we get these 5 waves down, then we run with Bitcoin, okay? And that's right around the corner. It's playing out like we think it should. We're getting, obviously this is on the small time frame, but on the small time frame, there's a bunch of bearish candles, right, with strong wicks to the upside, and then here's a doji where you have strong wicks up and strong wicks down, basically indecision. So lots of red. Lots of red, but should end in a bounce, a big, big, big bounce. Bitcoin just dipped below 19K, but bounce right back up. Don't be fooled. This is the last move of all of that consolidation right here. This is that last move. All right. Check the chat. This is more exciting. So yeah, Nice Hash says, forgot the 3rd day candle didn't close green yet. Hopefully it does. Nice Hash, thanks for the info. I still think we get a huge bounce. This is a huge bounce. Ethereum. 15-minute time frame. Let's see. Let's go back. Does this change? No, this doesn't necessarily change our analysis, because this is still clearly wave 1, this is still clearly wave 2. You may be getting a leading diagonal into your intermediate wave 1. Nothing has changed here because market structure has not been broken. Looks dramatic. This looks mad dramatic. This looks really dramatic. But yeah, all these when you get so many complex corrections, it's almost silly to try and count it. I do it because I like the exercise, but it's just like, it's hard to know. It's hard to know where you're at. It's hard to know where you're at. But I think it's, if you take this A wave, right, your initial breakup structure right here, and you measure your phi ratio, this should show you exactly where you can expect to play. So everything in this region up until 18.9 is fair game, and we're pushing it to the limit, but 18.9 is the phi ratio, and typical B waves, so if this is an A wave and whatever comes after, right, should play within the phi ratio for this not to be impulsive, to just be part of a corrective pattern. Okay, so typically if I'm playing this and I've got stops or liquidation points, it's going to be a bit below this phi ratio right here. Okay, what's anything bouncing yet? Anything bouncing yet? Dot bouncing a bit. Dodo not yet bouncing. Synthetics not yet bouncing. Harmony not yet bouncing. Bouncing a little bit. Zilica bouncing a little bit. A little bit. We want big bounces, big bounces. So that's what we're expecting. But yeah, this is why you do technical analysis and you really try and pay attention to the higher time frames, and you try to get context, because out of context you should just sell everything. When you see a candle like this, if you have no context and you don't know where you're at, you just react to this, I guarantee much of the market is reacting to this and is selling into this, whether because they want to or because they're forced to sell because their stops or liquidation points just got hit. Yeah, but how many times do you see that? A big consolidation, some people think we're going up, some people think we're going down. The market first goes down in one way, and again, it's not a nefarious thing. It's just because the last move of any complex correction is impulsive. The last move of any corrective pattern is impulsive. So you get this impulsive move that may seem like you're going down, but actually, if you were actually going down, what you would have done was go up first, pivot, and go down. And that's why you study price action. This is why you study technical analysis. And you don't just look at a chart and react to the candles that you see, because it is sometimes it's misleading. Actually, that makes me believe. I know this is counterintuitive. I know this candle sucks, but this makes me more bullish. My question to myself is, am I okay? Are my stops and my liquidation points positioned in such a way that I can survive this capitulative move? Okay, because that gives me more of just reading this in context, giving me more confidence that the big move, the resulting move, is up, right? But yeah, obviously, with not much knowledge on technical analysis and just overreacting to the charts and the candles on a higher or low time frame, right? I'm selling and I'm losing my soul with this candle, right? But again, this is why you study. You have to understand context, and you have to be able to read price action and not overreact because for 15 minutes, the price dumped, right? You understand what the context of the move is. It's not always price, but price action. You want to look at what the price is telling you. The price is telling you here in Cardano that we went up and we're correcting down, We went up for 5 waves, corrected down for 3 waves. You're going to resume, right? The object or the reaction here is not to sell, it's to buy more actually. But this is why we study, you know? You don't, this isn't intuitive. You have to study to get to a point where this makes sense to you, where you can read, oh, okay, did I lose the channel? Okay, you look at channels. Okay, a bunch of stuff, whether you can read it or not. If you think the price is ultimately going to go up, you're buying here. Okay, if you think the price is ultimately going to go down, you're making sell orders here. Okay, but then you don't start selling and giving up the ghost just because the price retests the bottom of the channel, because it's done that multiple times. Here, and then one last time here. And you do expect that before a move up and out of the channel. You're not going to move. It's unlikely. You know, maybe it happens sometimes, but it's unlikely for you to make the big move from the middle of the channel, right? So just context, guys, and this is why technical analysis, I think, is so important to learn properly if, you know, you're going to trade. Because without this understanding, without this knowledge, you're really, really at a disadvantage. Because you're just going to do a lot of silly things. Sell when you're supposed to buy, and buy when you're supposed to sell, you know, like that. So yeah, and I think the funny thing about this is, look at everything just right in their channel. Like everything's kind of like, you know, just chilling in the channel, and then Bitcoin is the only one that it's gonna completely break the channel to the downside. But again, why do you study technical analysis? You learn about Fibonacci patterns and phi ratios. Because if you take this A wave right here, right, this initial break of structure, this right here, okay, or actually right there. So you take that A wave, you take the Fibonacci retracement of that, and you see that you literally went to the extent of the phi ratio there. Okay, you didn't break it. You're getting really close, but you went to the extent of the phi ratio, which means, technically speaking, you're still playing in this range, although you really are testing the idea of playing in the range and wicking out of the range and creating a new impulse to the downside. Okay, but in context of everything, you're still playing in the range, technically speaking, right? So yeah, the amateur will sell this. The amateur will, you know, give up the ghost and think that the big move is down. The pro reads this as, it's a little scary, but all things equal, the bearish move is here, rejection, consolidation, and further rejection, and then making the lower low here. Okay, so the bearish move, I'll repeat, is come up to the bottom of this range. Whoops. Okay. The bearish move is this. Come up to the bottom of the range, consolidate, come down, and make a lower low. That's the bearish move. That's when you want to sell. That's when you're like, okay, game over. Okay? Until that point, you probably want to just not do anything or buy more if you do think it's going to go up. Technically speaking, that's what you would be waiting for before you made a decision to sell, and you would probably confirm the bearish move down, right? But again, on a lot of these assets, you're not making lower lows. You're making a lower high, right? On Litecoin, you're making a lower high, which you can expect, right? Nothing crazy. Dodo, you're still within range, and you're kind of making a higher high if you look at it, right? You did all this, you're still making a higher high right here. You just played it in this range. And same with a lot of other assets. Yeah. So let's have one more look at the DXY and we'll call it a stream, and hopefully tomorrow we can talk about how big the move is that we're making. So let's look at the DXY once again. Okay, still playing in that range, in that 0.5 to 618 golden pocket. Okay, am expecting a rejection in this pocket. Okay, may not, and we may be putting in some sort of flat correction, but given this price action, I think it's likely that we get a rejection in here and then start our impulse down. Yeah. So if there's nothing else, my friends, I wish you happy hunting in these markets, and make good decisions, and hopefully we get the big moves to the upside, because I think a lot of people, a lot of us here, a lot of us in the cryptocurrency market, market participants are waiting for that big move, waiting for the DXY to cool, waiting for that big bounce, and I think we finally get it today, right? Given this move, this is the move that says, all right, this 8-day, almost 9-day consolidation is up, and we're ready to rock. All right, so yeah, that's it for me, guys. Take care, and yeah, I'll see you tomorrow.